October 22nd, 2019. Good morning, guys. It's Tuesday, and thank God for those Tuesdays when the market gives us a handful of opportunities. There's a ton of opportunities today, guys. This is absolutely beautiful. It's easy to actually beat the earnings season when it is so freaking predictable. McDonald's versus CMG trades. We're buying puts. When McDonald's bounces, currently trades at 202, 203 pre-market. Buy it on the bounce when it hits 205, guys. With that said, restaurant stocks are heading for a substantial move lower. So what we actually want to do, buy some CMG puts ahead of the earnings, and we want to buy some more in case it bounces. Now, the best trade of the day right here, guys, BIIB puts. Yes, we did buy some ahead of the earnings yesterday because of the chart. But market is doing something exceptionally stupid, and here lies an incredible opportunity to make 400, 500, 600, possibly 1,000% trade right here, BIIB. We're going to glance in the details in just a second. HHC, man, these oil stocks has been bearish as hell. So why is HHC falling while oil is actually moving higher pre-market today? And finally, you're going to say, Leonardo, you definitely lost your mind. Do you actually have the word calls here on the front page today on October 22nd, 2019. Guys, VRTX calls. This is the only calls we are considering for the day. And yes, this could be a highly lucrative trade because this stock is breaking out of a huge consolidation where it's been consolidating close to 2 years. So we'll take a glance at that in just a second. So as earnings season approaching, moving through it pretty quick, we're considering some of the trades that were highlighted in our weekly planner for the earnings. Now, as far as BIIB, here's the deal, guys. Greatest short of the year. Thank you, Mr. Market, so much. Highly appreciate that. Stock is up $110 since we're considering the trade yesterday. Okay, this is why you guys want to steer step into trades like this. Okay, because even though, okay, things are pretty ridiculous when it comes to this stock, shorting on the bounce will produce the highest returns. That's why you don't want to just gamble and put a ton of capital at work ahead of the earnings. Sometimes this plays will work ahead of earnings, but in this particular case, the market is doing something exceptionally stupid that we are going to capitalize on. So understand this. It's quite simple. The stock is up $110 pre-market on the hopes of its Alzheimer drug approval. Now, the reason why the stock has actually dropped from $380 to $220 in the first place over the course of last year is because of the worries that the drug was actually not going to be approved. So at this point, the stock is up $110, and guess what everybody is missing? Well, the damn thing, drug, is still not approved. So the stock dropped 160 on the hopes of drug not being approved. All these worries are still very much valid. Now all of a sudden, there's a glimpse of hope at the end of the tunnel, and the stock is up $110. I think this is one of the greatest shorting opportunities, guys, we have seen in a long freaking time. To break the trade down, the stock is up from 220 all the way to 327, currently trading about 306, 310 level pre-market at the point I'm recording this. We are buying 305, 300, 295, even 290 puts when market opens and adding on the bounce. So buy some puts on BIIB as soon as the market opens and add some on the bounce. Let's go. As far as this trade concerned, we're predicting the black candle formation just like we predicted accurately in Netflix just a few days ago. Basically, here's the idea. The stock drops from 380 all the way to 220 on worries that the drug was not going to do well. Now the stock is up, back up here to these levels right here. It runs into a huge resistance between 310 and 320. So it's not likely to break above 320, but it is likely to break under 300 at some point today, which makes sense to buy the 300 level puts, targeting an area of about $270. The black candle is going to actually coincide with institutional investors utilizing this pop as a way to get rid of the stocks. Boy, did they get lucky. Boy, did everybody that wanted to get rid of this stock all of a sudden get the greatest shot to do it today, and they sure will when the market opens. Now, this is how this chart is going to look after the day is over. It's going to resemble the Netflix chart, highly accurate. As you remember, Netflix was popping on what appeared to be, to institutional investors, great news, and then it sold off 3 days in a row. By the way, congratulations to those of you who took the Netflix trades. 2,000% return on Friday. Actually, over that, some of you that took the trade, you guys know how well you've done. Congrats on that. Actually, the reason I'm showing you this chart is the fact that we can see multiple days in a row in the stock of BIIB. So it's going to resemble highly this chart right here. Black candle followed by red candle followed by another. And guys, congrats to you also if you took Netflix trade yesterday when we send out the alert in the group, because Netflix is down pre-market. I don't have the slide here, but it's trading down all the way to 271 from the 278 level. So congrats. This is going to be another highly lucrative trade. All right, BA lower to 320. You're going to be thinking Leonardo, but BA did not drop. I'm saying it will drop. The fact that Boeing actually announced a dividend last night after the market closed in response to the further stock drop, okay, it is actually an overall negative. What it really tells us is management is highly freaking worried about the fact that things are really spiraling out of control and the stock could experience a huge drop. Typically, you've seen the management announce an extra dividend or rise in the dividend when there's some serious issues just to hold the stock from moving low. And this is exactly what's happened with Boeing. So stay with the trade and on bounces. This stock is heading lower. There's no doubt about it. Considering HHC, 110, 100 level puts at open, guys. This one, boy, Howard Hughes Corporation is going down, guys. I mean, this is freaking unbelievable. They are revamping the whole freaking company, okay, changing everything they have done for 100 years. And it happens today, guys. So, yeah, the stock is down pre-market 20%, but it's likely to drop another 10. So we're targeting an area in this one of about 95 bucks, 95, 96. Right now, pre-market's trading 106. That's a $10 move that could be highly lucrative. The options are not heavily priced now. They could be when the market opens, but this is a huge opportunity of the day, guys. Jump on this one. Considering CMG, 850, 830, 820 puts at open ahead of earnings. Guys, you may be thinking, Leonardo, why do you have the chart of MCD, which is McDonald's here? Did you insert the long slide? No, absolutely not. We're using this reaction in McDonald's as a way to project what CMG is actually going to do. And then clearly there's two case scenarios. CMG can just drop like a rock, just McDonald's, just down 5 to 10% per market. But what we can actually see is CMG could actually pop. So what we're recommending is step into the trade. Buy some ahead of the earnings. Notice we're not suggesting 750 strike, guys. Okay, I know if some of you dreamers out there, oh, it can drop 200. Yes, it can. But in case it doesn't, you're going to do much better off. You buy 850 at 30, 820 strikes, okay, and save some reserves in case the stock does bounce, kind of like what you're seeing this morning with BIIB. But overall, this is going to be a great short opportunity on CMG based on what CMD is telling us so far. Considering SDMP 195 puts on bounce to 95, 98 area, guys. SDMP has been down from $270 all the way to 30 bucks within the last year. Crazy, crazy spiral. Now, they finally make a deal with UPS, so the stock is up. What actually has brought the stock down from 270 bucks all the way to 30 is now causing the stock to only move higher by about 20 bucks. With that, we see a great, huge shorting opportunity in this one because institutions no longer believe in the growth story in this particular name. They see continued issues for the company, regardless of this deal that supposedly it made with UPS yesterday, last night when this announcement actually came out. So institutions are really not overly excited about what's happening here. To help you visualize it on the chart, basically short the stock right here. This is when it was dropping, right? So 280 down to 200, down to these level right here, 95 bucks. Exactly. That is the level of huge resistance that we're seeing. The stock is unable to break above because even when this great news hit the market last night, it's been hesitating around this level. So this would be the level to actually come in and short the hell out of this thing in the expectation of it to move literally $5, $10 low. It's a quick trade, guys. Quick trade. Overall, the news is positive, but the move lower is going to take place. Considering VRTX calls, Leonardo, what's going on here? Are you telling us to buy some calls? Guys, this one is actually looking good in the chart for the calls. When the market was crashing, when everything was going lower, multiple times over the course of the last 12 months, this one has actually held up nicely. And now it actually does have great news. It announced last night. Actually, it announced just before the market closed. Then they halted the stock. And this one is going to move higher. Now, how much higher? Probably 200, 205 level. So far, it's about 189 bucks. Guys, there's a $10, $11 move. Target 200-300%er on the returns right here. Take profits and move on to the next trade tomorrow. Here's how VRTX looks on the weekly chart, guys. Nice and easy, okay? This is why we like it. It breaks out just above this blue line. It's above. You know, most of the charts that we've shown you in the last month, I mean, they're making these death crosses. This one, as you can see, maintained a very nice uptrend, very nice bullish consolidation going on right here. Okay, most of the dominant characteristic is the stock is actually moving on high volume. Exactly the opposite of basically what we notice in pretty much every chart out there. So this one, despite of the market dropping huge, never dropped. It's been consolidating between 155, 185 level. This morning it's about 189. If it heads above 195, guys, we could actually see the stock at about 220 in the next 10 days. But just target the area of about 200 and be happy. Take the profits and let's get it to rock and roll, collect them, and move on. Now, retest the top part of the tunnel one more time. This is exactly what's happening pre-market. Yesterday was a move 7 overall, was a bullish move. The market just was kind of hesitant to do a whole lot, but it was still overall moving higher with, you know, kind of looked like a nice move too that reversed into a 7 after all by the time everything was said and done. 2-day sequence 2-7, not a very bullish sequence, guys. The reversal is near the corner. Oil is clearly supporting the markets today, but overall, when we take a look at this 5-day sequence, guys, it is not a bullish sequence at all, by no means. 1, 11, 11, 2, 7. Damn, we're likely to get like something like a 5, guys, today. If we take a score, like if we were playing soccer, the score right now would be 4-2, and Bears would be winning the game. If you take a look at this, 11 formations, this is a 4. 11, there's 4 move 11s right here on this 5-day sequence, and there's 2 bullish reversal moves right here, portrayed by move 11s, or you know, similar formation to like a V shape, which would represent like a move 13 type formation. So got 2 bear reversal moves against 4 moves 11. So the score is 4-2, guys, and even though things are looking bullish, actually Bears are winning. So next market move for today is 11-6-1. Yes, there is a small probability of a 1, but overall the market could easily sell off going to the rest of the day, and we can easily get another 11 since that's the predominant move in the market. VIX preview, it's holding its level rather nicely. I mean, this is amazing. The market keeps moving higher and the VIX just refuses to fall. Nicely maintaining that 14 line. So buy puts near the money. VIX numerically low. It is uptrending, but it is certainly up trading regardless of the market actually moving higher. So basically VIX refuses to drop meaningfully as market continues higher. That is definitely a bullish sign for the VIX. Every time it makes this type of moves, it typically reverses and moves higher. So I wouldn't be surprised if VIX actually maintained that level of 14 today, actually move higher to maybe 14.5 at some point later in the day. This is actually was predicted by this reverse head and shoulder formation that we indicated 2 days ago. Now, key takeaways, guys. Short any intraday bounce to this level of 3,008, 3,015. We're basically there pre-market already. Do not trade big directional position. Focus on earnings. And, you know, unless VIX hits 14.8 or 15, oil breaks below 52, do not put on huge bear positions. The market is in a sideways trend. There's likely to break lower once we hit some of these identifiers, signals, 14.8, 15 on the VIX, oil breaks below 52. It is going to take place. It's just a matter of time. Guys, let's roll. Focus on it. Short the hell out of BIIB. Collect the gains. Let's roll. Big week, guys. I'll catch you on the next trade soon.
Can't you see that